Blackwell is not a chip in mathematics. A platform is called Blackwell. Although we still manufacture GPUs, they don't look the same as they formerly did. It's Hopper here. The world was altered by Hopper. Claps. It's all right. Hopper, Blackwell. We're looking more closely at NVIDIA, a major player in the AI and technology space, in today's video. We examine how NVIDIA may affect its market position and the larger tech sector as it navigates through revolutionary improvements in AI and machine learning, drawing comparisons to Tesla's creative application of AI in automotive technology. In order to determine what this means for the company's future and any investment opportunities, we also analyze the most recent Wall Street evaluations and favorable feelings regarding NVIDIA. So take out your notepad and let's explore the complex realm of high-tech investments and the fascinating potential of artificial intelligence. Additionally, remember to click the like and subscribe buttons. Let's begin this video and welcome to Tesla Stock News. The Blackwell architecture was unveiled earlier than expected in NVIDIA's most recent quarter, which was a welcome surprise and increased investor confidence. The key question at this point is whether NVIDIA needs to keep revealing these developments in order to keep up the pace. Concerns previously centered on a possible gap, a so-called air pocket, between the upcoming Blackwell and the existing Hopper architecture. These concerns have been allayed, though, by the strong demand for Hopper from the previous quarter and the encouraging projection for Blackwell by the end of the year. Many people are wagering that NVIDIA's financials will remain good, therefore expectations are high. Even though there is a common joke about how unpredictable stock moves are after earnings are released, overall mood is still positive, particularly in the AI spending sector, which has shown remarkable resilience in the face of widespread sustainability worries. Concerning NVIDIA's position in the market appears too soon. Regarding investments, NVIDIA has a history of surfing waves of varying demand because to its cyclical business model. Demand is currently at its peak, which has sparked discussions about whether this elevated level can be sustained over time. This leads us to an important point. The stock's trajectory is akin to a high-stakes game, despite NVIDIA's remarkable success, which has established it as a heavyweight in technical advancement, particularly in the automotive sector where AI and edge computing are transforming vehicle capabilities. Investors need to determine whether this is a passing peak or whether NVIDIA can actually maintain these highs continuously. Anticipation grows as the earnings announcement, which is scheduled for the end of August, approaches. The story of a tech sector dealing with its own set of difficulties is also influenced by the larger market environment, particularly in light of the recent performance of the Russell 2000. Joining specialized channels, such as the one stated in the video description, could give people who are eager to keep ahead of the latest data insights and market developments an advantage. There are two opposing viewpoints regarding investments in artificial intelligence, AI, due to recent developments in the technology industry. On the one hand, the rapid advancement of AI capabilities is fueling a growing sense of confidence. However, investors appear to be growing more cautious, which could indicate a hangover for tech companies whose impressive rises were perhaps unnecessarily accelerated. The potential of the AI industry seems to be in its infancy, notwithstanding recent market tremors. Last year, similar worries were expressed, but businesses like NVIDIA exceeded expectations with impressive financial results. There is currently concern that the enormous investments in AI, especially in the AI processors required to run generative AI platforms, may not be able to maintain their current velocity. These concerns were allayed last Friday, though, by a surge in chip stocks driven by NVIDIA and AMD, among others, indicating that demand for AI is still strong. Despite not fully recovering from prior losses in July, this chip stock recovery demonstrates the persistent need for AI technologies. Wall Street experts support this view, seeing it as the start of a tech boom propelled by a surge of artificial intelligence. According to their predictions, governments and corporations may spend more than $1 trillion on AI in the upcoming years, with chipmakers expected to be at the forefront of this expected increase. Furthermore, the situation has a lot in common with Tesla, another corporate behemoth renowned for its innovative application of AI in automobile technology. as its cars depend more and more on cutting-edge AI for autonomous driving and other intelligent features, Tesla, like in decision-making. Some billionaires are shifting their investments from NVIDIA to index funds amid the market upheaval, which analysts believe might see a sharp increase. However, the growing demand for Bitcoin ETFs, which is being driven by strong demand and limited supply, indicates important financial shifts that may change the nature of investing. But the larger tech industry is still solid despite these changes. Although high, the present valuations do not reach the unsustainable levels of the dot-com bubble phase of the late 1990s, indicating a more stable investing climate today. A cautious optimism that today's tech investments, especially in AI, could yield significant returns comparable to those of game-changing breakthroughs like the internet and railroads is reflected in the continued popularity of moment investing. In this dynamic industry, NVIDIA plays a crucial role not only in AI, but also in the larger tech ecosystem, which also includes businesses like Tesla. Chip technology breakthroughs led by companies like NVIDIA immediately assist Tesla, which is well known for its creative application of AI in electric cars. The collaboration between NVIDIA's innovations and Tesla's apps demonstrates a common path toward more AI-integrated technologies, as automotive technologies increasingly depend on AI for features like increased safety systems and autonomous driving. The long-term forecast for AI is still optimistic, notwithstanding the present market difficulties. The expansion of firms like NVIDIA will be further fueled by the fact that large IT corporations are not only continuing, but probably expanding their spending in AI hardware. This unwavering dedication highlights a larger trend in the sector where AI is viewed as a fundamental change in how economies and organizations function today, rather than merely a technical advancement. With almost 6,934 million shares moved, NVIDIA's stock is seeing abnormally high activity. This volume is far more than the 100-day average of 9.73 million shares. The new 10% investment by NVIDIA in Serve Robotics corresponds with this surge in trade, which has led to more conversations on sites like Yahoo Finance, where Serve Robotics is presently trending. NVIDIA offers strong arguments for growth investors to take notice. Although the company's historical EPS growth rate is 59.7%, the expected growth, a startling 17.4% gain this year, is what really sticks out. The industry average predicts an EPS loss of 15%. Furthermore, NVIDIA's strong financial health is highlighted by its year-over-year cash flow increase of 33.7%, which outpaces the industry average of 14%. With the Zacks consensus estimate rising by 0.3% in the last month, earnings projections for the current year have been revised upward as trust in NVIDIA grows. This improvement is indicative of increased investor confidence in NVIDIA. Although perceptions of rivals like Broadcom are changing, the company is still a major player in the lucrative AI silicon business, which is expected to reach a valuation of over $50 billion over the next 5 years. NVIDIA remains a focus for investors despite Broadcom's dominance in several market segments. Estimates indicate that it may approach $50 trillion in market capitalization in the next 10 years. These advancements are also consistent with Tesla's trajectory in the technology sector, specifically with regard to AI-powered automotive innovations. Tesla gains from NVIDIA's advancements in AI in a similar way, integrating AI into its cars for improved safety features and autonomous driving. The convergence of NVIDIA's semiconductor innovations with Tesla's automotive applications is a prime example of the interrelated growth prospects in the AI and machine learning-driven tech industry. Ananda Barua, the head analyst at Loop Capital, expressed confidence in NVIDIA, indicating that Wall Street is looking at the company with optimism. In a research note published on July 22nd, Barua maintained its buy rating for NVIDIA, indicating a strong growth outlook with an expected upside of over 54% over the following 12 months. Please let me know if you require any other help.